Hello everyone, today we will discuss a crucial topic, the global economic slowdown and how it impacts Indian economy. With rising interest rates in US, geopolitical tension and supply chain disruptions, India's growth is facing challenges. But don't worry, we will also talk about the solutions, what India can do to tackle this situation. Let's break it down. The global economy is slowing down due to several reasons. First is US Federal Reserve's rate hike. To control inflation, the US Fed has increased the interest rates, making global borrowing costlier. Second is China's economic issues. A real estate crisis and lower demand have impacted the global trade. Third is the Europe's struggle. High energy prices and the Russia-Ukraine war and the industrial decline are affecting this region. Fourth is supply chain disruptions. Delay in shipments and rising raw material costs are making goods expensive worldwide. Since India is deeply connected to global trade and investments, these slowdowns are affecting us in many ways. First is decline in export. India's export sector is seeing a slowdown, especially in IT services, textiles and pharmaceuticals, gems and jewelry. For instance, India's merchandise export fell by 6.86% in the last few months. Second is drop in foreign investments. Global investors are pulling money out of emerging markets like India and moving to a safer assets like US bonds. Foreign direct investments has slowed, affecting startup growth. Foreign institutional investors outflow have caused stock market volatility. This means less liquidity for businesses and fewer new job opportunities. The third reason is rupee depreciation and import costs. As global investors exit, the Indian rupee weakens against the US dollar. The rupee has fallen past 83 per USD, making imports costlier. India imports 85% of its crude oil, leading to higher fuel prices and inflations. Electronics, machineries, fertilizers also became more expensive. Fourth is impact on jobs and startups. We lower global demand and reduced investments. Indian startups facing funding challenges leading to layoffs. Second, in this point is IT sector hiring has slowed, affecting fresh graduates. Manufacturing slowdown reduces the jobs in MSMEs. This makes job security a growing concern. So let's talk about what can India do in this situation. Here is a good news. India has a strategies to counter the global slowdown. First is boosting the domestic manufacturing. The production linked incentive scheme is attracting investment in electronics, automobiles and renewable energies. Second is strengthen the trade with other countries. India is signing free trade agreements with the UAE, Australia and UK to reduce dependency on western markets. Third is encourage foreign investments. The government is easing FDI rules to attract more foreign companies to set up operations in India. Fourth is control inflation and stabilize rupee. The RBI is managing inflation and using forex reserves to prevent extreme rupee depreciation. Fifth is focus on infrastructure and digital growth. Large-scale investments in highway and railway, 5G technologies, digital payments like UPI. These measures can make India self-resilient and self-reliant. So, what's next? The impact of global slowdown will continue, but India's strong domestic market and policy action can help us navigate this crisis. Key growth areas include renewable energies, fintech, and digital infrastructure. If India reduces dependency on global economies and focus on self-sufficiency, we can emerge stronger from this slowdown. What do you think? Please let me know in the comment sections.